Hey everyone, welcome to another weekly real estate market update. Leigh here from Martinuzzi Property Group. Hope you're having a fantastic week. Well, it would seem like the Australian property market is very resilient despite everything that's going on around the country and around the world right now. The floods, the war in Ukraine, the talks of a eventual interest rate rise probably this year. You would think that would cause a lot more uncertainty and a more shifting, rapid pace of change to the property market in Australia. But certainly on ground level here on the Sunshine Coast and the properties that we're dealing with, there is still a large amount of interest and properties are still selling for fairly good prices in fairly quick times. We had a couple of great sales just this week alone, 3 properties under contract, 2 last week. So it means that the buyers are still out there and they're putting down strong offers, and in most cases, multiple offers on properties as well. So there is still that buyer demand. However, most of the experts have now suggested that Queensland, Brisbane and the Sunshine Coast have hit their peak and we'll start to see that shift. Now, the floods may actually quicken that shift as well. I would have thought it would have been a slower transition, but the impact of the floods will certainly have an impact on buyer demand. CoreLogic this week actually stated that for every 1 property listed for sale nationally, 1.2 properties are selling. Now, that's down from the previous figure of 1.4. So there is a shifting market, and that buyer demand versus supply is certainly coming into more of a balance. It seems evident now that that is happening. And as we get into 2022 and into the next years, we will see more of that happening as well. Now, CommBank is the one bank that has suggested that in 2023, we will see a declining market of about 10%. So they're quite high numbers. Most of the other major banks predict anywhere between a 4 to 8% decline in market values across Australia in 2023. Matusik, who is a property expert, he's also written an article this week or last week, I think it was, and he actually feels that we will see the cash rate change this year. We'll probably see it raised by about 0.15%, which will take the cash rate to 0.25%. But then over the next few years, we might see the cash rate go as high as 3%. And that's a big change from the current cash rate of 0.1%. Now, the banks are already going to be acting on that. They're going to be changing their variable and fixed rates without a doubt, and they're going to be putting into place tighter lending criteria as well. So that will certainly have an impact on the market as well. The floods, well, we noticed back in 2011, the floods had a fairly significant impact on property prices around Brisbane. And actually, for those flood-affected areas, Matusik points this out in a couple of charts, and you can see that in my weekly blog as well. It took 54 months for the property prices to rebound to pre-flood levels, 54 months. And in non-flood affected areas, it was about half that, about 25 months. So we would expect that that may be the case. Now, the difference being is that we're actually coming into the floods in 2011, we're actually at the bottom of the market, whereas right now we're at the top of the market. So that might make that time frame a little bit shorter, I would think. So a lot of things happening right now to impact the market, but one thing we know, there's going to be more properties coming to the market as people try and rush in there to capitalize on the higher prices that we've experienced now. But the buyer demand might not be as confident as it was in previous months and last year, of course. So that's what's happening right now. We've got a couple of cracker properties coming to the market this week over the next few days. So keep an eye out for those guys, a couple here in Palmwoods, and got a lot of buyers still looking around the area for properties as well. Whilst we are still well below stock levels on the 5-year average, we are starting to see more properties trickle in now, which is probably refreshing news for many buyers out there. Like always, guys, if there's anything we can help you with, buying, selling, renting, whatever it is, please give us a call. MPG, with you all the way.